And joining me now, Fox News contributor Liz Peek and Trump's former chief economic advisor, Joe LaVorgna. Joe, let's start with you. How would you qualify the president's first 100 days?
He's been very active, and he's followed through on many of the things that he said he would do, including implementing tariffs. It's interesting the markets may not have taken him as seriously as he suggested, but he's moving in the right direction. I'm optimistic, though, from a growth perspective, we will get a budget deal in the coming months. That's key to the economy's performance in 25 and beyond.
Yeah, because we need the tax cuts.
The tax cuts, right. So the tax cuts are important because if we don't extend the tax cuts, you have a record large tax increase next year. It will meaningfully damage growth. The tariffs will come into more focus. Some of those tariffs, I'm sure, will be used to pay for some of the things the administration wants. And therefore, I think this period of maximum uncertainty we're in right now will clear and the economy will take off in the second half.
You look at some recent Fox News polling, Liz, and it shows that the president, elected largely because of the economy, is struggling when it comes to the economy. His overall rating on the economy is 38%. It's lower when it comes to tariffs and inflation. Both of those numbers are at 33%. Do you think those lowered numbers for the president affect his political capital?
Well, I don't think it affects what's going on in Congress. They are pretty much on a march path to getting this bill done, both the Senate and the House, and they've overcome a lot of obstacles to getting where they are now. So I think that's going to happen regardless of this polling. The polling, by the way, is interesting because actually, yes, people are still worried about inflation, Lauren, but they're less worried about it, according to this poll, than they have been at any time since 2021. Yes, they're worried about their families' fortunes in the future, but they're less worried than they were in January. So it's not all negative directions. Some of it's quite positive. And I think, yeah, to Joe's point, I mean, they are moving so fast on so many different fronts. I think the average viewer, the average voter is somewhat bewildered about how all this is going to land, right? And we've had a lot of turmoil in the markets as investors are confused and concerned about how it's going to work out. But I looked at a Washington Post summary of 31 major campaign proposals, and I would say only but 6 have actually gotten traction. They're either in the wind, working on them. They've been blocked by the courts. But all of these things, so like 25 to 30 things he's moving forward on, I think that's unimaginable.
I know we call it Trump
speed, right?
Trump speed. He really is moving fast with all of this. And thus far, it seems like he still does have the trust of the American people that he can do these really huge things of rearranging trade as we know it with the rest of the world and protecting the American worker, Joe. Yes,
the polling, having looked at data for a long time now, and polling can be very finicky, especially on how the questions are asked. Yeah. And the president's policies, to me, are very strategic, reshaping things in a more profound way, which means the daily movement of polling or even weekly moving of polling may not matter so much. Mm-hmm. Ultimately, the proof will be in the pudding or the results, if you will. And if the economy performs as well as I expect over time, because legislatively he's able to accomplish his agenda, then the polling will track the numbers. And I think right now there's just this tremendous uncertainty, and I'm not really sure the president is focused on some of these polls as much as people might think.
Is he focused, Joe, on the markets?
He's focused on the markets. He's also focused on interest rates. Interest rates have to come down. He's also focused on getting the price of essential goods, gasoline, food, down. And sort of kitchen table issues, those matter quite significantly.
Liz, I brought up, does he watch the markets? Because I think Americans trust that he does watch the markets because he cares about people having money and the quality of life. But do you think he'll soften his stance or change his stance or his position based on what the markets are doing?
Well, I think he's really determined to bring manufacturing back to the United States. And we've already seen, he's completely right, trillions of dollars that companies have committed to building new facilities in the U.S., et cetera, the most recent one being Roche. I think that's incredibly positive. No one's talking about that. The liberal media is not going to talk about anything positive. To your question about is he going to soften his stance? I think he already has to some degree, Lauren. I think some of the time when he put in that 90-day pause, I think it was because the markets were in free fall for 2 consecutive days, and I think that was the right thing to do because you're not going to get trade deals done in 30 seconds. No. It does take 90 days, maybe it'll take 180 days. These are complicated measures. It'd be great to get 1 or 2 done, but look, expecting this to happen overnight is simply not credible.
Some people say get a template, get a trade deal with, let's say, Japan and India, and then structure the rest based on what you got.
Right, and India might be one of the first.
President Trump taking action to rebuild America's workforce, signing a new executive order to boost skilled trades and expand apprenticeships in jobs that don't require a college degree. It's part of a broader push to revive manufacturing. Joe, you were telling me a little bit about your story earlier. Yeah. This is a big deal for you.
I've got a bias. My father was the director of the largest vocational technical school in the state of Connecticut and did all the trades. And I thought for many years ago how important it was to be a tradesperson, that you could really make quite a good living. And it seems like, if anything, we've certainly lost a lot of skilled labor. So I'm all for it. From what I've seen over the years, you give people tangible skills that they're not going to get replaced by a computer. So I think it's a great approach if we can do it.
Yeah, and then I was joking with you. I said, well, you are an economist. Do you know how to do all the handy stuff in your house with that pedigree?
I've gotten better at it, but I've had to. I've had to, owning a house.
You know, Liz, the president has this vision of restoring American greatness via our manufacturing prowess, the way it was at the height back in the late 1970s. Do you think with artificial intelligence, with automation, do you think that is possible?
Well, I think we can have a resurgence in manufacturing for 2 reasons. One, yes, because robotics and automation clearly bring down the labor as an input to the overall production, right? In other words, our big problem historically was enormously high wages here compared to China, Vietnam, Mexico, et cetera. If you can narrow that gap via using fewer workers, that's a plus. And we still are creating wealth. We're still creating jobs and so forth, just not as many as historically would have been the case. But the other thing, Lauren, is energy. If the industries of tomorrow, if you look at data centers and AI and so forth, the need for cheap energy is unbelievably important. Power in Germany costs 4 times what it does here. That is a huge incentive for companies to come here.
You are teasing our next segment.
Oh,
Liz
good for
Peek,
me.
Joe LaVorgna, thank you so much.
You.